it meets all the requirements of the exchange, and it's available for delivery to fulfill a futures contract. So when someone exercises, when someone calls for delivery, there's a warrant attached to it very quickly and easily, but it's ready to be delivered. It's the sort of metal which can be delivered and is delivered, and probably will be delivered if it's registered, when the contracts reach maturity. So only registered metal can be transferred to a long holder, the buyer. So here you see the price of silver in Shanghai and in Comex, New York. So the red line at the bottom shows us the price at Comex is $83.22. For silver, that's an all-time record. We closed on Friday at around $79.30, and we've opened this morning at nearly $84. So over $4 higher than the close on Friday. Now, that's a huge leap for the price of silver. If you think back when silver was sort of $30, we got very excited by a jump in price of 50 cents. So we just had a leap in price of $4 on that $79.30 price. It's gone to $83.22 at the moment in New York. Now, what's interesting is the Shanghai price has been climbing all morning since it opened around midnight European time. So we look at the Shanghai near-dated future here, and you see it's at an all-time high of 92.08. The chart we're looking at is a 1 minute by 1 minute chart here. Now, if I spread it out to a 1 second chart, you'll see that Shanghai looks like it's stopped trading at the moment. There you are. See this flat line here? That kind of looks like it's maybe it's a lunch pause. I don't know about Shanghai times, but it's temporarily paused, whereas the Comex price is still moving around. I'll put that back to the 1 minute chart. I think whoops. We can look a little bit longer. Let's look at it. Yeah, I just need to adjust that so you can see that better. Auto fit scale. So as you can see, that shows us the difference between the Shanghai price, which is in green, and the Comex price in red, and the gap in between the two is the difference. So it was very little difference, but as of now, the difference is at an all-time record, from 92 to 83. That's nearly $9 of difference. It's got to be a record. Let me put that back to 1 minute chart now. So there we have the 1 minute chart. So in green at the top, it's the Shanghai price showing 92.07 at the moment, and in red at the bottom, showing the Comex price of 83.23, both all-time records. And just for information, gold is also hitting an all-time record. It was a little bit higher this morning. I just put it up there, 4567 is the latest price. And we go back to where we were. So there we have the Shanghai price in green at the top at 92.07 and Comex at 83.24. What's going on? Why is the silver price soaring so much? Well, there was an artificial intelligence video came out over the weekend. It alleged, as it has done on many occasions in the past, that a major bank is in deep, deep, deep trouble by being short too many ounces of silver. I tried to verify whether there was any truth in that video. It looks to me like it's just a story that they made up for the purpose of getting clicks. So clickbait, really. But the allegation was a major bank is in trouble and going to bring an entire country down. Complete rubbish, as far as I can tell. One of the things which tells me that it's rubbish was the fact that they talk about this bank being short billions of ounces of silver. when, according to the CFTC, the amount of silver shorts is, I haven't got the figure in my head, but it's something like 200 million across 22 banks. So how can one of those 22 banks be short billions when the total is only in the millions across 22 banks? That doesn't make any sense. But people are unfortunately reacting to that story as if it's true, and they don't know if it's true. People don't know because they can't do the maths and they haven't looked at the numbers. But I'm as sure as I can be that that's not a true story.
What stands out most is the widening gap between silver prices in Shanghai and New York. Historically, these markets track closely, with arbitrage quickly eliminating differences. Today, that mechanism appears strained. Asian prices now trade significantly higher than U.S. futures, a rare condition that implies difficulty sourcing physical metal. If silver were readily available, traders would move metal to capture the spread. The fact that this isn't happening at scale suggests tightness in supply. When price discovery migrates toward physical markets, it often means paper pricing no longer reflects real-world availability.
Unless, of course, there's something really hidden going on. Now, but obviously we've got to look at the real reasons why gold has been rising over the last few months. What's been going on is gold and silver, but what's been going on with silver in particular? Well, first of all, for many years, about 4 or 5 years, the mined production has not been as high as the consumed production by industrial use. And the gap has been getting wider. The reason it's getting wider is mine production has been going down for 10 years, and it's going down because most of the silver which is mined as a byproduct of other metals like lead, zinc, nickel, copper, and so on. So the production of silver doesn't increase much unless the production of those other metals increases. That's the first reason. So the production's going down from the mines, but at the same time demand has been rising. And the demand is coming from the electronics industry, which is a big consumer of silver, the solar panel industry, the automobile industry, and the weapons industry, all of which are said to use quite a lot of silver. And the amount of silver being used is not going down, it's going up. So every year, silver consumption has been rising, and so you have a widening deficit that's the gap between what's mined out of the ground and what's being consumed. That deficit's been growing bigger. So where does the difference come from? Well, the only place the difference can come from is by recycling old silver. So that would be, for example, your granny taking her candlesticks down to the pawn shop to be melted down, or it might be an exchange-traded fund which gets net redemptions and sells silver back into the market, or it might be you or I deciding that we like the price and we take some of our coins to the coin dealer or bars and cash them in, and he will, if he's got too many, he'll send them off to the refinery and it'll find its way back to the manufacturers. But there's a second thing which I think is worrying manufacturers here, which is perhaps explaining the short-term rise in silver. Let's just go back to here, go back to the browser, and we'll bring up the silver price here so you can see where it's going at the moment. There's a second thing which is happening. Silver manufacturers are hearing about the shortage of silver, and whether this shortage is real or imagined, it doesn't really matter. There's a worry. And so they'll be all diving into the market saying, we can't allow our production line to come to a halt just because of the 1 ounce of silver we need per car, for example. So if you're manufacturing a car and it costs $50,000, whether the silver price is $100 more or $5 more, won't make that much difference. If it's $100 more, your car's going to cost $50,000 plus 100. So they can't let the production line halt for lack of silver. And hearing all these stories, I think a lot of silver consumers, in terms of manufacturing, are saying we can't rely on just-in-time supply chains. We need to secure enough silver for a bit longer than that, just in case we can't get our hands on it. So there's probably this rush going on by manufacturers to make sure that they're first in line to get the silver while they can still get it. And what's the evidence for a shortage? Well, the widening gap between the Shanghai price, here the green at the top, 92.08, and the Comex price, 83.32, widest ever. This tells us that there must be a problem somebody's got a problem laying their hands on physical silver, because historically the gap has been 50 cents, a dollar, occasionally a bit wider. But when there's a gap between two marketplaces, the large bullion banks can simply pile a load of silver onto a plane, and it can come out of London or New York and be in Shanghai the next morning, ready for delivery to arbitrage away the difference. But that's not been happening. So why aren't there plane loads of silver flying to Shanghai to take advantage of the much higher price in Shanghai? Well, to me, I think the reason is the silver isn't really easily available. It's not there.
Over the weekend, viral AI-generated claims circulated online, blaming the rally on a fictional banking collapse tied to massive silver short positions. The data doesn't support these stories. Official regulatory figures show total institutional short exposure far below the exaggerated claims. While misinformation can accelerate short-term volatility, it does not explain sustained price divergence across global markets. The real drivers are slower, structural forces. When price moves persist beyond headlines, it's usually because supply and demand fundamentals are asserting themselves, not because of a single dramatic rumor.
Now we're going to move over now to look at the Comex delivery notice and how that's been going. I had that up on my screen a few minutes ago, but let's just have a look now at that. So here we see the Comex delivery notices in 2024, 2025, and 2026. I'm going to focus for a minute on the January numbers, which in January 24 it was 1,360 contracts were delivered. 25, nearly double, 2,370, and 2026, 5 times as much as 2024 so far, and January's not finished, by the way, at 6,800 contracts were called for delivery. When it's called for delivery, it means someone somewhere is taking physical delivery of the silver. They want it for manufacturing or some purpose. So we can see that whoever it is who's taking delivery, we can't know that. There's more and more people want delivery. So this is not just one manufacturer. It could be a mixture between manufacturers and savers and investors and hedge funds and family offices and high net worth individuals and maybe the US government itself. Who knows? We don't know who's taking delivery, but what we do know is collectively there's a lot more silver being demanded for delivery this year than last year, because we can see here in the January line the number of contracts coming to maturity is increasing a lot. So I'll just move it down to, we'll look at it in ounces here. This is now in ounces. So what's being demanded in January so far is 34 million ounces, that figure there, 34 million ounces, up from the 11 million ounces the year before, up from the 8 million ounces the year before that. Now we're going to go to compare these numbers. Oh, by the way, I just want to, before we go there, just look at the big month. The biggest month for delivery is March. March 2024 was a big month, although December was bigger, and March 2025 was the biggest month of the year. So it's likely that the deliveries in March 2026 will also be very large. And if they come in much larger than the 80 million ounces that you see here from last year, let's say it's twice that or 3 times that, there might be a question where all that silver is going to come from. And we'll see now what's available. So up at the top, we've got 2 categories here. We've got total registered silver available for delivery, 123 million ounces, and total eligible silver, 315 million ounces. So What is registered metal? So registered metal is eligible metal that doesn't yet have a delivery warrant attached, but it meets all the requirements of the exchange and it's available for delivery to fulfill a futures contract. So when someone exercises, when someone calls for delivery, there's a warrant attached to it very quickly and easily, but it's ready to be delivered. It's the sort of metal which can be delivered and is delivered, and probably will be delivered if it's registered, when the contracts reach maturity. So only registered metal can be transferred to a long holder, the buyer, when the futures contract holder stands for delivery.
Silver has been running a supply deficit for several consecutive years. Mine output has declined, largely because silver is primarily produced as a byproduct of other metals, limiting how quickly production can respond to higher prices. Meanwhile, demand continues to rise from electronics, solar energy, electric vehicles, defense applications, and medical technology. Recycling fills part of the gap, but not enough. This growing imbalance means inventories are slowly being drawn down. Over time, persistent deficits have a habit of forcing prices higher, especially when industrial users cannot substitute silver easily.
On the other hand, we've got something called the eligible silver. Now, eligible silver is also physical metal stored in the exchange-approved warehouse, and it meets all the exchange's quality specification standards by fineness, weight, and so forth, and therefore it's eligible to be delivered against futures contracts, but it does not yet have a delivery warrant attached to it. It means it could be used for delivery, but it's not registered as such. In other words, it might or might not be used at a future date for delivery. It'll be turned into eligible and then delivered. But it can mean that this registered silver, the eligible silver, is held by another third party. So eligible silver can be converted to registered and then registered can be delivered. But it could mean that the eligible silver is held by a third party like an exchange-traded fund or a hedge fund or somebody who doesn't actually ever intend to deliver. But let's assume the best-case scenario. If all of the eligible and the registered silver were available to be delivered in satisfaction of the futures contracts, we have a total of 439 million ounces available on Comex at the moment. Now that number will go up and down as people take delivery and, of course, as new silver comes into the warehouses out of the silver mines. Now, just to tell you a small fact, that number, 439, has been falling recently. Don't know if it'll continue to fall, but to replenish it, silver has to come out of the mines and go into Comex, or from other sources, of course. Now, what's going to happen in March? So, if we look at the March number, there's 101,000 contracts open in March. These are futures contracts, which, when we reach the delivery month, i.e. March, those who are the longs can, if they wish, call for delivery of, in this case, at the moment, 508 million ounces. And you can see there's only 439 million in the warehouse at Comex, and of that, only 123 million is available for delivery at the moment. So if all of those 508 million were to ask for delivery, the silver wouldn't be there. But actually, historically, most of the maturing contracts on Comex get rolled over to another futures month. That's how their bullion banks make their money. So that there'll be 508 million short and 508 million long on this, but the shorts, being the bullion banks, when it gets to the current month, will buy back at the spot price and then sell at the futures price, which is in a contango. Contango means the futures price is higher than the spot price. So they're basically buying spot at a low price, selling the future at a high price, and collecting the difference. And that they keep rolling that year after year after year. But of course, that's fine as long as the longs don't call for delivery, because the longs call for delivery, they can't, even though they have to buy the silver at the spot price, they're then delivering the silver in to the buyer, and then they would be, if they were to go short at the long end, the futures month, they would be naked short, and that's a very dangerous situation to be in. So, as we can see, there's 439 million ounces available for delivery, and the contracts for the March alone, of course there's contracts for either side of that, are 508 million ounces. In other words, we've got potentially demand for 508 million ounces coming up, with only somewhere either 123 or 439, somewhere in between, actually available. So less available than what might be asked for. Now let's just go through a few other things which have changed on the silver market. During 2025, we saw that silver was made into a strategic metal in the United States. What that means is that government agencies are now authorized, if they wish, to buy and stockpile silver. We've got no story or evidence that that has started, but it wouldn't surprise me, given how essential silver is to industry in the United States, that certain government agencies don't decide to start stockpiling the silver. It could happen.
One of the clearest signals of tightening conditions is the surge in futures contracts being settled with physical delivery. More market participants are choosing metal over cash, reducing available warehouse inventories. At the same time, open interest in upcoming delivery months implies potential demand that exceeds readily deliverable supply. While most contracts historically roll forward, rising delivery requests increase stress on the system. Compounding this, governments have begun classifying silver as a strategic material, while export restrictions, particularly from Asia, are limiting global flows.
Let's go back to the Shanghai price, see if anything's moving. It seems to be stopped for them. We'll have a look at that in a minute. Another thing which I think is relevant is, with effect from the 1st of January this year, China has said that any exports of silver from China need to have permission. Now, historically, China has been a net exporter of silver, but now saying it's got to have people have got to have permission to export it means that only a very small number of exporters will be able to do so, and getting permission might be quite long and tedious and complicated. So I think we can expect to see less silver being exported from China to the West. So that again is a factor which is pushing up the silver price. And then, of course, we've got all the manufacturers, such as the car companies, saying, we can't rely on a supply chain which is just in time anymore. We need to have a certain stockpile. So I think that will be driving up the silver price too. But last but not least, we're having globally, I think, a general unease about the levels of government debt. Government debt is rising. Not much is being done to address it. And there's a real fear that we go into some sort of currency reset, perhaps with a CBDC, where they tell you that you can't use your old dollars in the bank. You have to use this new currency, CBDC. And although it's worth the same, one for one, there's restrictions on how much of your old currency you can convert into the new one, or what circumstances you could convert the old one to the new one at 1-to-1, and that effectively means that your old currency isn't deployable. So you might get permission if you're, for example, converting to buy your vegetables, but you might not get permission if you're planning to use the money to speculate against government bonds. We don't know what the rules will be when it comes in, but there could be a sort of reset where effectively we end up in a situation where only the new central bank digital currency is allowed to circulate, and you're not allowed to move your old currency into the new central bank digital currency, which means if you have a bond maturing, it's going to mature in your bank and you're going to have the old currency in your bank, but you can't actually spend it because you can't move it into your CBDC wallet because it's not authorized, because it's above the limit. And of course that helps the government a lot if it happens, because it means all of their debt will effectively be in the old currency and in a defunct currency. So if this causes hardship in the local economy, they'll be able to bail out pensioners and poor people and give everybody universal basic income without necessarily having to resort to too much borrowing, because they're going to be in the new currency, their debt to GDP ratio is going to start off at 0, and even if they have to bail out everybody in the entire country, it's only going to go to about 5% compared with the over 100% that many countries are at the moment. So just to finish off, silver is going higher. It looks like it's not trading at the moment in Shanghai. It leapt up this morning here when we came into in the middle at around midnight European time. Went from 86.5 roughly in Shanghai to 91.5. It's now over 92. It's 92.08, and as you can see, it's flatlining a bit in Shanghai there, which might mean they're on a lunch break. Might mean they've stopped trading. I can't say. And the Comex price is $83.50 for an ounce of silver. So, ladies and gentlemen, that's all I've got to say now. It's Monday. The date is the 12th of January 2026. Markets are open in Asia. They haven't yet opened in Europe. It's 5 o'clock in the morning. It's actually 5:30 in the morning here. But markets will open in a few hours, and we'll see what happens when they open to the silver price. So be sure to keep an eye on it in the day. But as I say, we've had this huge leap up overnight to the highest prices ever. It's great for those who've got some silver, but there's also a lot of people perhaps feeling they should earn more. So I'm going to I'll just comment actually on whether you should earn more or whether you should sell. If you don't have any and you feel that you should be having some, my advice is not to rush in. And I don't mean, and that's not a price prediction, it's more one of the psychological things. You don't know how you're going to feel if you buy some today and the price dips tomorrow. I have no idea if it will do that, but I'm just saying. So when I buy anything like a security or anything I'm planning to buy, I say how much I'm willing to put into this, and I typically buy 1/3 of what I'd like to put in. Then I sit and wait, and it could wait a week, a month, or it could be a year. When I make my next purchase to get to 2/3, it really doesn't matter to me whether the price is higher or lower than what it was when I made my first purchase. The only question I've got is, when the time comes to make the second purchase, do I still want to make it? And eventually the third purchase can be made as well. But it helps you understand how I feel about something. If you buy something and then you think, you know what, I shouldn't have done that, and you've got a full position size, it's quite hard to deal with. Whereas if you just bought 1/3 of a position size, you don't get trigger happy if it goes up because it's not enough profit, and you don't get trigger happy if it goes down, thinking, oh my God, I've lost my money. You can actually think about it more rationally when the position size is much smaller, because it matters so much less. And then the other question people ask me is it time to sell? Well, if you want to sell some today, you're getting an all-time record price. My only comment on that is I personally prefer not to sell the entirety of a position. In fact, I prefer to keep at least the initial position. So if you have some silver and it's doubled, why not top slice if you want to raise a bit of cash, provided that you've got something useful to do with the cash, which is going to be as good as earning silver. Because if it's not as good as silver, why would you do it? My view is, if you've made up your mind you want to cash in, then probably look at just top slicing the profit, so you take some of the profit off the table and leave the rest of your silver working for you.
Beyond supply and demand, silver is benefiting from a broader loss of confidence in fiat systems. Record government debt, persistent inflation concerns, and growing discussion of digital currency resets are pushing investors toward tangible assets. Silver sits at the intersection of industrial necessity and monetary protection. For holders, this rally validates long-term positioning. For newcomers, discipline matters. Gradual accumulation reduces emotional risk. For sellers, partial profit-taking preserves exposure while freeing liquidity. What's unfolding isn't just a price spike. It's a revaluation of what real assets are worth in an uncertain world.